Welcome in everyone, Expat Stacker coming to you with another video, and today we're going to be taking a look at an article which talks about comparing different types of investments. This article comes from Yahoo Finance. It was written on May 6th, 2018, and I became aware of this article through Salivate Metal's channel, so credit to him for making me aware of this article. I'll put a link in the description so you can check out his video on this. Basically, I agree with his conclusion on it, but I also wanted to dive a little bit deeper into the contents of the article, come away with my own conclusions as well. Some points that he didn't really talk about. Salivate didn't really talk about that at all. So. First of all, let me just say that I'm not for or against making any type of investment. Whatever you choose to do with your money, that's up to you. Everybody has a different, starting place. Everybody has different types of constraints, different types of needs. Obviously, we all make different amounts of money. If you choose to invest in the stock market or precious metals or real estate or in some type of business or cryptocurrencies or whatever it is, that's up to you, and that's fine. I'm not for or against any of those things. It really depends on your own situation, and I just think that a lot of these different types of investments are just different. For example, I look at precious metals as an investment, and yes, they are an investment. I've seen a lot of YouTube videos from stackers and other people who talk about financing that precious metals are not an investment. I disagree with that. I'll make a video someday about why I disagree with that, but I look at them as a very low risk investment, and the point is basically as savings. It's to preserve your wealth over time and against inflation and things like this. So I look at stocks as something similar, but they're different. I'm not the type of person who would invest in the stock market to try to get rich or be a day trader or anything like that. Stocks are a riskier investment, but also, they kind of keep up with inflation. They pay dividends, and they offer compound interest. That's a little bit different than precious metals, which do not pay dividends. So just a different type of asset, different type of investment. And I'm just saying that to let you know that I understand the differences, basically my own understanding of the differences between stocks or ETFs or, these kinds of things versus commodities like precious metals. So yeah, we can compare and contrast them, and they are different, and they have different advantages and different drawbacks and things like this. But the article that we're looking at today, Warren Buffett proves why investing in stocks beats gold. It tries to make it sound like, this is, this gold stuff is debunked, and I'm going to debunk this article. Okay, so let's just jump right into it here. I'm going to read through the article. And then we'll go ahead and basically debunk the contents of this. So it says, it's no secret that Warren Buffett is bullish on the American economy. The Berkshire Hathaway chief executive and one of the richest men in the world made his case for just why investing in American business rather than commodities, and especially gold, is the way for investors who want the best returns. Okay, so is Warren Buffett one of the richest guys in the world? And yeah, so I'm not trying to take nothing away from him. I'm not saying like he doesn't know what he's talking about, but I really strongly disagree with the contents of this article. So let's continue reading and find out why. During the Berkshire Hathaway annual shareholder meeting in Omaha, exclusively live streamed on Yahoo Finance on Saturday, Buffett opened with an anecdote about purchasing a stock with a little more than $100 back in 1942. While Buffett invested his cash in Citi Services preferred stock, he said if he'd had $10,000 to invest and had bought the equivalent of an S&P 500 index fund — index funds didn't exist in those days — that $10,000 would be worth 51 million today. Investing in gold, by contrast, would have yielded significantly less. However, Buffett admits an investor would still have the very same gold to do, quote, whatever you want with it. For every dollar you have made in American business, you'd have less than a penny of gain by buying into a store of value that people tell you to buy every time we run into a little pain, quote, Buffett said. Investing that same $10,000 that would have yielded $51 million by investing in the American businesses on the S&P would have netted an investor $400,000 in value with gold, according to Buffett's calculations. Quote, the overriding question is, how is American business going to do over the course of your lifetime, quote, Buffett said. Okay, so this article, interesting, all right, so what actually happened in his anecdote? Okay, he says that he purchased a stock with a little more than $100 back in 1942. I think it was like $110 or $120 or something. And what was that stock? It was City Services Preferred Stock. Okay, and then the article just takes a turn like from reality and facts and history in this anecdote to complete, just alternate history and ifs and buts, candies and nuts. It says, he said, if he had $10,000, okay, so first of all, he was a kid, if I remember the article correctly, when he had $100 back in 1942. What kid do you know, other than if they have like rich parents or something, has $10,000 to invest with? I would say that is not very common. Okay, and then it says if he had $10,000 to invest with, and if he had bought the equivalent of an S&P 500 index fund, and then it says index funds didn't exist in those days. Okay, then so why are you saying if he had done something? It didn't exist back in those days. You guys say that yourself here on Yahoo Finance. So why would you say that, if he had $10,000, highly unlikely, very uncommon, and if he had invested in something that didn't exist back in the day, then it would be worth $51 million today. Why would you say that? I mean, you're talking about something that's impossible, actually, right? And anyone can go and say, well, if I had invested in Bitcoin when it first came out and then sold when it was at its peak value, over $20,000 a few years ago, then I would have made a lot of money. Were there some people who actually did that? Yes. So, they can claim that, but I didn't do that. I could write an article and say, well, if I had, instead of saving my money or, investing in whatever I did, invested in Bitcoin when it was at its cheapest and sold when it was at its highest, then I would have made a lot of money. Anyone can say that. That doesn't prove that investing in stocks is better than investing in precious metals. And the point that Salivate Metal made was that gold didn't actually lose money. Investing $10,000 back in 1942 would have netted you $400,000 in value with gold, and I guess that keeps up with inflation and also, adds a little bit of increased value there. So, but I wanted to think about, there's this huge leap from actually what happened, investing $100 in 1942 with City Services, all of a sudden to, this alternate reality of $10,000 and investing in an index fund that didn't exist or whatever. So I wanted to look at, okay, let's look at what happened. He invested $100 back in 1942 in City Services Preferred Stock. What happened to that company? Because I've never heard of City Services before. So I did a little research and I found American Oil and Gas Historical Society. There's a nice little article that explains everything about the company, who started the company. Basically, it was an oil and gas company. And it expanded in from 1910 and then through the teens and the 20s, and the company was growing and increasing in value. And then in 1964, City Services changed its marketing brand and introduced the name Citgo. All right, so some of you guys, if you're a little older, you might recognize this name, Citgo. Here's how I remember this company's name, Citgo. I remember that from NASCAR when I was a little kid watching NASCAR. So basically, it was an oil company, right? And so what happened with Citgo? I really didn't know. But this article explains. T. Boone Pickens, Mesa Petroleum tried a hostile takeover, and City Services resisted the takeover, and Gulf Oil Company came in and with a white knight merger offer, and then there was litigation that ensued, and so this is court battles and everything else like this. But ultimately what ended up happening was Occidental Petroleum acquired City Services on December 3rd, 1982. All right, and under the terms of the purchase, City Services stockholders, okay, so guess what? Warren Buffett was a City Services stockholder, were entitled to exchange each City Services share for 41 cents of a share of $15.50 cumulative preferred stock. Okay, so basically what that means is a preferred stock that was worth $15.50, the shareholders were allowed to get 41 cents on that. So what does that mean? 41 divided by 15.50, that means that you lost basically all your money, and it was only worth about 2.5% of your original value. So I mean, if your original investment is only worth 2%, then of your original investment, then that means you lost 97% of your original investment, which would have been the actual case here for Warren Buffett on December 3rd, 1982, with his original investment of $100 in City Services. So because the article just, takes this leap of faith into an alternate reality and starts talking about investing $10,000 in the S&P, even though the S&P didn't exist and all this stuff. So what I wanted to do was think about what would have actually happened with his original $100 back in 1942 if he had invested it in gold by the time that this company, City Services, was, basically taken over in December 3rd, 1982. So let's take a look at the gold price. In 1942, the gold price for 1 ounce was $33.85. So in 1942, Warren Buffett would have been able to buy about 3 ounces of gold, okay? And what was the gold price when City Services was taken over in December 3rd, 1982? Let's take a look at the gold price in December 1982. The gold price was $1,163.44. Okay, $1,163.44. And like we said, Warren Buffett would have been able to get 3 ounces of gold. So $1,163.44 times 3 ounces of gold. That's $3,490.32. And if we divide that by 100, his original investment, then that means that his original investment went up about 34% of its original value, almost 35%. So going up 35%, which is what would have happened with his original $100 investment in gold, sounds a lot better than going down by 97.4%. So, just to me, like, this article makes no sense because they talk about, like, oh, if I had $10,000 and if I invested in something that didn't exist, then I would be rich. That makes no sense at all. And even this number of 400,000 in gold makes no sense because he didn't have $10,000. So let's just talk about reality. So that's the reality. If Warren Buffett had held on to his original investment in City Services Company by 1982, he would have lost all his money basically. He would have had $2 of that $100, and that's not even counting inflation. However, if he had bought 3 ounces of gold, his investment would have gone up by 35%, and that's just the reality. So, I mean, to me, that's what the Yahoo article should have reported on is the reality, the truth of what happened. So, and I want to continue reading about what happened with Citco because it's crazy. All right, so again, under the term of the purchase agreement, so they got 41 cents for a share that was worth $15.50, and then a year later, Occidental, so the company Occidental Petroleum, Occidental sold the entire refining, marketing, and transportation division of City Services to Southland, as well as the Citco brand to Southland Corporation, owner of 7-Eleven stores, blah, blah, blah. Company historian notes that in 1986, Petróleos de Venezuela, the national oil company of the Bolivarian Republic of Venezuela, purchased 50% of Citco, and the remaining of the company was acquired by Petróleos de Venezuela in 1990. So who owns Citco now? The government of Venezuela. All right? So I don't think I really need to say much about that, do I? A lot of stacking channels talk about what's going on in Venezuela right now. And you can look at the revenue and income and assets of this company. They've been going down by the billions. So, again, this article, Warren Buffett makes it sound like, oh, well, if I had just made all the right moves with a lot of money, then I would have had a lot of more money. But what he actually invested in is worthless now, right? And I mean, I just don't understand how Yahoo Finance can just publish this. I mean, people read this and then they think, oh wow, yeah, investing in S&P is great. Like I can make millions with just a little bit of money. That's not what happened. Warren Buffett, obviously he's a great investor. He's a rich guy, but this was not, his first investment was a total failure. So I don't know why they glorify this, with this article. So the reason I'm saying this is not to slam Yahoo Finance or slam Warren Buffett or try to say that I know more than they do or anything like that. Of course not. But I'm just saying, be careful what you read, Like this article just goes from reality and history, and in the same sentence, literally the same sentence, while Buffett invested his cash in City Services preferred stock. That actually happened. And the next part of the sentence, he said if he had $10,000 to invest and bought blah 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 S&P 500, that those things did not happen and they were literally impossible, and the article says it. So I'm just telling you guys, you watch financial news, you read financial news and things like this. There's a lot of channels on YouTube and things like that. Try to, be able to sort through these articles and think about what's real and what's actually telling about history and what people have done to make investments and make money and things like this, and what is fantasy or, when they're just like glorifying things, So basically, I don't think that this article proves at all that investing in the stock market, quote unquote, beats gold. It really depends. I mean, you're taking a risk. There's counterparty risk in the stock market. And if you're willing to, and you can afford to have some of that risk, maybe it will pay off for you in the long run. And, I mean, the article is right. The S&P 500 index fund has historically gone up over the years. And, it is a pretty good investment for a lot of people. But this article is just really misleading when it's saying that, investing in stock beats gold every time. It really, really depends on what you're trying to do with your money. So anyway, that's my take on it, guys. I appreciate you watching the video, and would love to hear your guys' thoughts and opinions on this. So go ahead and leave a comment in the comment section. And that's it for this one. So I'll catch you guys on the flip side. This is Expat Stacker, and I'll catch you later.